Welcome to my channel. This week we had a fantastic run again with respect to Nifty Total Market. On Monday we had a bumper run of 1.68% on the upside, and on the subsequent days it has been pretty much neutral to bearish. But that is not going to change the stance in the market overall. In the broader perspective, the market has recovered pretty strongly and we have seen 0.88% returns in the current week. Now coming to the charts, as we mentioned, the breakout has happened earlier from the recent July highs which were made earlier, and the next leg of move will be break the previous highs which were made in the month of January 2026, followed by all-time highs of September 2024. If these two levels are breached, then we can see a clear-cut upward run in respect to the market in the coming days. And that is going to signify the broader market bull run or the secular bull run as we call it in general. But that again, it will be limited to specific sectors which we are going to discuss now. I have highlighted the markers on the left over here. The yellow marker represents the broader market with respect to Nifty Total Market, and the green ones are the ones which have been running in the past, and the blue ones are the new entrants in the markets which are making new highs. The red ones are the ones which were the leaders in the past and they have silently slowed down, or the next leg of up run is not so vigorous. So now moving ahead with respect to the market analysis, I'll be looking into Nifty Mid Small Health. So over here in the past nearly 2 to 3 months, we have gained around 15%. And the same continues with Nifty Healthcare. The structure looks really good. The bull run continues over there, especially with Nifty Pharma as well. Now in the new week entrants, one point I want to highlight is Nifty Small Cap has broken into all-time high sector. From here, we can anticipate the run to continue on the next leg, and it is pretty much confident over here. And now moving on to the leading sectors which broke out in the past week. As anticipated, we had expected Nifty Auto could be the leading sector in the coming days, and it has given the breakout clearly. Now Nifty Auto segment is all-time highs. The same goes to Nifty India Defense. Earlier though, the sector was pretty strong. There was a lag altogether. But this time, it is pretty much confident and has broken out clearly. And Nifty India Manufacturing Space is one other sector which has given a clear confident breakout. Same goes to Nifty Junior. It has come from the consolidation which has happened in the past, and now it is confidently moving towards all-time highs. Now the highs which were made in the month of September 2024 are yet to be breached, but it is moving firmly and strongly here. And another major interesting observation is with respect to Nifty 500, which we had anticipated earlier. We have observed that Nifty Total Market has gone nearly to all-time highs, but Nifty 500 is more or less slightly lagging with respect to Nifty 750. What does it say? Nifty 500 is nothing but the Nifty Total Market minus Nifty Microcap space. So this one clearly signifies that Nifty Microcap is leading very strongly. And this leg of the run is supported by small cap and mid cap spaces. So as a result, it is clearly evident that large cap is pretty much trailing and our focus should be on mid cap and small cap. And another entry into this particular leg is Nifty IT. In the past week, we had showcased that the range where there was some amount of stagnation, and this week we are seeing that stagnation is coming out. And Nifty IT is trying to break the previous recent high, which is a very clear-cut resistance factor for us. And Nifty Mid Cap continues to make newer highs. Same with Nifty Mid Select. All these things are pretty good, and Nifty Chemicals as well. Now, also with respect to consumer durables, which is showing strength, and along with Nifty Realty sector. Now coming to Realty sector, this week we have seen a pretty much clear-cut pause. So the structure looks great, and if history repeats, we can anticipate one more leg of run-up strongly here. In the past, we have also seen some random observations saying whenever the market or the Nifty Realty has tried to break out this particular trend line, it has seen a pullback, which is pretty much clear. If this setup continues, we would likely exit the investment which we made in Nifty Realty. That is from an investment perspective. Now moving ahead with Nifty, the major concern is with respect to Nifty 50 because it is at the 200 days moving average very clearly here, and it is trying to break out the previous high, but still there is some kind of stagnation. So I would anticipate the highs which have been made here around 24,750 and the lows which were made during the war will be the region where Nifty is going to be sustaining for a while. If we see another leg of breakout, we will see a good amount of resistance at all-time highs, and again there will be a slight pullback, and from there on there will be one more leg of recovery, and that is how bull run will begin with respect to Nifty 50. If at all there has to be a recovery coming in this space. Now in the past, we had seen that Nifty Private Bank, which had given a clear-cut breakout, and the momentum seems to be cooling off. And in our mentoring session, we had clearly mentioned that This is one particular space which is giving good hopes, but this is not going to continue or sustain for longer. If you have observed the historical movement with respect to Nifty Private Bank, it is clearly evident that Nifty Private Bank was not supposed to or was not intended to give a clear run up altogether. Now moving ahead with Nifty Microcap, this is another space as I mentioned in the past which is pretty strong and moving up strongly. And the momentum is continuing clearly here. That is one stretch with respect to Nifty Microcap and it is near all-time highs. I would anticipate this all-time high has to be broken out and there could be a pause for a week or two maybe or like a month or so. We never know what the timeline is. Post that if we see a clear-cut breakout, that's a healthy sign altogether. Now moving ahead with Nifty Energy. In the past, we had entered Nifty Energy as our primary investment. Since the war broke out, there was a clear-cut breakout in the Nifty Energy as well. Oil prices spiked and every single thing supported Nifty Energy. But now there has been a pullback. Though there is no loss of momentum as such at this point, there has been a clear pullback. And this has to be cleared out or this has to be broken out pretty strongly. That is, the highs which were made in the month of May 2026 have to be broken out for a clear-cut trend. The same goes to Nifty Metal as well. There has been a pullback and the highs which were made in the month of June have to be taken out. If not, the momentum cools off with Nifty Metals. Now, why are we slightly bullish on Nifty? What are the reasons? See, Nifty Metal is very highly correlated with dollar index. Whenever dollar prices rise, Nifty Metals tend to fall. Whenever dollar prices fall, Nifty Metals tend to rise. In the recent past, we have seen the dollar index was rising. As a result, Nifty was struggling, but along with it, the rupee was also falling. Now it is pretty clear whenever dollar index falls, Nifty Metals tend to rise. So the dollar index was breaking out in the month of May, June. As a result, we had exited our investments. That is a clear-cut inverse correlation of metals with dollar index. Now the dollar index seems to be cooling off. We will have to wait and watch how this pans out. If there is a clear-cut cool off and the dollar index basically enters another range of values, then it's a clear-cut sign for us that us to enter Nifty Metal. Else, we will not be entering Nifty Metal clearly. Now, moving ahead with Nifty PSU Bank, more or less this particular space has been trailing. I don't see much movement here. If at all, if there is a clear-cut breakout from the recent highs, then there is a sign over here saying that we can continue with the investment. Now, what are the other factors in the past which has aided the bull run? It was oil. In the current or recent weeks, we have seen that oil prices falling around $77. Though the US is trying to put tariffs on India at this point, I'm not particularly concerned, which is pretty much fine for us. As long as this particular US oil is not broken out and it is not making new highs, we are good from the economic perspective. Same goes to UK oil as well. One interesting observation among this is the spike of the rise of price in gold and silver. Now we had seen in the past that gold and silver have given 3x returns, that is 3 times the investment. Now we can conclude that the gold is back on the radar. Yes, definitely on the radar. But is it investment worthy? I'm not sure at this point. I'll wait and watch how things are going to turn out with respect to US dollar, Nifty, Nifty Metal, and in turn with gold and silver. See, India is one of the biggest consumers of gold, but not a producer of gold. China is the biggest producer and the consumer of the gold in the world. So if any kind of up run or up leg is going to continue, it has to come through China. So I'll be monitoring the behavior of Chinese gold miners in the global market, which is going to impact the demand and supply of gold in the overall market. That is how it is. My stance is going to be aligned over here, and this is about the current week. If you're liking the content, please do like, share, and subscribe to my channel. Thank you.